Hi, this is the fourth complete comprehensive example. In this example, we will learn preparation of deceased partner's executor's account till the loan amount which is due to the executor is paid. So let's go to the example sum. Example sum. The balance sheet of X, Y, and Z as at 31st March 2020 was as follows. To the left of the screen, we have the balance sheet given, and on to the right, additional information. The profit sharing ratio was 3:2:1. Z died on 31st July 2020. The partnership deed provides that point A, goodwill is to be calculated on the basis of 3 years purchase of the 5 years average profits. The profits for the years ended 31st March were 2020 rupees 24,000, 2019 rupees 16,000, 2018 rupees 20,000, 2017 rupees 10,000, and 2016 rupees 5,000. Point B, the deceased partner to be given share of profits till the date of death on the basis of profits for the previous year. Point C, the assets have been revalued as stock rupees 10,000, debtors rupees 15,000, furniture rupees 1,500, plant and machinery rupees 5,000, building rupees 35,000. A bill receivable of rupees 600 was found worthless. The final point D, a sum of rupees 12,233 was paid immediately to Z's executors, and the balance to be paid in 2 equal annual installments together with interest at 10% per annum on the amount outstanding. We are asked to prepare Z's executor's account until it is finally paid. So as per the question, the solution is to prepare Z's executor's account. And to get the amount to be transferred from Z's capital account to Z's executor's account, we need to prepare Z's capital account. So in this sum, we will begin by preparing Z's capital account, which is part of the working notes. The actual solution is Z's executor's account till the loan amount is finally paid. So Z's capital account will come as part of working notes. We'll begin with the working notes. And after transferring the amount to Z's executor's account, as part of the solution, we will prepare Z's executor's account till the loan is finally paid. So let's begin with the working notes. First working note, Z's capital account. Left side debit side and right side credit side. We have particulars, rupees, particulars, rupees. We will begin by bringing down Z's capital balance by balance brought down 12,000 rupees. We'll deal with the reserves next. There's a general reserve of 6,000 rupees by general reserve account. Amount of the reserve 6,000 rupees multiplied by Z share in profits, which is 1/6, comes up to 1,000 rupees. There is a workman compensation reserve against which there is no liability. So we'll distribute that also by workmen compensation reserve account. 6,000 rupees multiplied by 1 divided by 6,000 rupees. We'll write off the fictitious asset, which is the advertisement suspense appearing in the asset side of the balance sheet. To advertisement suspense ₹6,000 multiplied by 1 divided by 6, 1,000 rupees. Let's go to point A. It says goodwill is to be calculated on the basis of 3 years purchase of the 5 years average profits, and the profits for the 5 years are given. So working note 2, calculation of Zee's goodwill. We have firm's goodwill equal to 3 years purchase. So 3 multiplied by the total of the 5 years is 24,000 plus 16,000 plus 20,000 plus 10,000 plus another 5,000, 75,000 divided by 5 to get the average profits. So this is equal to rupees 45,000 Zee share of goodwill equals 45,000 rupees firm's goodwill multiplied by Zee share in profits, which is 1 divided by 6, and we get 7,500 rupees. Now this has to be debited to the gaining partners X and Y in their gaining ratio. There is nothing specified, so the gaining ratio between X and Y is equal to the old ratio between them, which is 3:2. So X needs to be debited with 4,500 rupees and Y needs to be debited with rupees 3,000. So let's enter that by X capital account 4,500 by Y capital account 3,000 rupees. Next, point B, we'll calculate the deceased partner share of profits. Working note 3, Zee share in profits up to date of death. It says it's based on the profits for the previous year. So this amount is equal to the previous year's profits, which is 24,000, multiplied by the number of months, which is 4 months from 1st April 2020 to 31st July 2020. 4 by 12 multiplied by Zee share in profits, which is 1 divided by 6. Comes up to rupees 1,333 rupees. Let's insert that by profit and loss suspense account share in profits. ₹1,333. Next, working note 4, the revaluation of assets is given. So we'll do the plus minus approach to get the gain or loss on revaluation. So the working note 4 is to get the revaluation gain or loss. So we have stock is valued at 10,000 against the book value of 9,000. So under add, we'll write 1,000 rupees. Next, debtors 15,000 against the book value of 16,000. So 1,000 rupees under less. Furniture 1,500 rupees valued at against the book value of 2,000 rupees. So 500 rupees against furniture in less. Plant and machinery valued at rupees 5,000 against the book value of 6,500 rupees. So 1,500 rupees under less. Building valued at 35,000 rupees against the book value of 30,000. So against add, we will write 5,000 rupees. And the last item, bills receivable of rupees 600 was found worthless. So that's a reduction in asset. So we'll write it under less. So the total of the adds comes to 6,000 rupees. And the total of the less comes to 3,600 rupees. So we have a gain on revaluation of rupees 2,400, and Z share in the gain is equal to 2,400 rupees multiplied by 1 divided by 6, which is 400 rupees. So let's post this also by revaluation account. ₹400. The last point D is about settlement of the loan account. So we are done with the capital account. We'll balance this and transfer the balancing figure to Z's executor's account. Total of the credit side 23,233. So the amount which is transferred to Z's executor's account is 23,233 minus 1,000, which is 22,233. So the working notes are done. We'll have a look at the working notes in full before we continue with Z's executor's loan account. So the first working note was preparation of Z's capital account. Second working note, calculation of goodwill. Third working note, calculation of Z's share in profits up to date of death. And the final working note was Z's share in gain on revaluation. So let's go ahead with the solution of preparing Z's executor's account. So let's go ahead with the solution. Z's executor's account. Left side debit side, right side credit side. We have the first column for date, particulars, rupees, and on the credit side again, date, particulars, rupees. Before we begin, we'll write down important information. As per the point subdivision D, amount paid immediately is equal to rupees 12,233, and the balance is to be paid in 2 equal annual installments. And the interest rate is equal to 10% per annum. Now, as per the capital account, the amount which we transferred to Z's executor's account, amount transferred to executor's account is equal to rupees 22,233. And this amount was transferred on date of Z's death, which is 31st July 2020. So let's continue to prepare Z's executor's account. 31st July 2020 by Z's capital account. The amount transferred 22,233 rupees. On the same date, 31st July 2020, amount paid immediately to bank account 12,233. Now the loan amount is right now rupees 10,000, and each installment or each principal which is included in the installment is equal to 5,000. So let's continue. The next installment is payable on 31st July 2021. But the books of accounts are closed on 31st March. So we'll accrue interest up to 31st March 2021 by interest on loan account. The amount of the loan, 10,000 rupees at 10% per annum for number of months is 8 months. 8 divided by 12. So it's 1,000 rupees into 2 divided by 3. 667 rupees. So the year is over. We will balance the account. Greater total 22,900. Balancing figure on 31st March 2021. To balance carried down 10,667. Next year, beginning 1st April 2021, bring down the balance by balance brought down 10,667 rupees. We need to pay the first installment on 31st July 2021. So we'll accrue interest on 10,000 rupees at 10% for the balance 4 months. So it's 333 rupees. And on the same date, that is 31st July 2021, we'll pay the first installment along with the interest. So the principal amount is rupees 5,000 plus the interest 667 plus 333 comes to 6,000 rupees. The first installment is paid. Next, we'll close the year before payment of the second installment, 31st March 2022. By interest account. Now the amount outstanding is only rupees 5,000 at 10% for 8 months from 31st July 2021 to 31st March 2022. Comes up to 333 rupees. The year is over. We will close the year. Greater total 11,333. Balancing figure on 31st March 2022. To balance carried down 5,333. Beginning of the next accounting period, 1st April 2022. By balance brought down amount 5,333. The next installment, the second and final installment, payable on 31st 7 2022 by interest account. We'll accrue interest on 5,000 rupees at 10% for the balance 4 months. Comes up to 167 rupees. On the same date, 31st July 2022, to bank account. The principal amount 5,000 rupees plus the interest 333 rupees plus 167 rupees, 5,500 rupees has been paid. The account balances there is no pending amount which has to be paid. The full amount has been paid. So this is the solution to the given question.